This presentation is for Chapter 7, Master Budgets. This is the second part of Learning Objective 3, where we prepare the operating budget for a manufacturing company. In Part 1, we prepared the sales, production, and direct materials budgets, and in this part we are going to complete the direct labor, manufacturing overhead, cost of goods sold, and selling and administrative expense budgets. So the direct labor budget will estimate the direct labor hours and related costs needed to support the production budget. So to complete the direct labor budget, we start off with the budgeted tablets to be produced, and that came directly from the production budget. Then we multiply the number of tablets to be produced by the number of direct labor hours it takes to produce each tablet, which in this problem is 3 hours. That gives us the total direct labor hours needed for production. Then we multiply that amount, the hours, by the cost per hour of $25, and we get the budgeted direct labor cost for each of the quarters, and then we can see the total for the year, which is $168,000. Next, we're going to look at the manufacturing overhead budget. So again, the manufacturing overhead will include the variable and fixed manufacturing overhead for the production for the tablets. We will have to calculate a predetermined overhead allocation rate by using the total estimated overhead cost in the numerator and then the total estimated quantity of the overhead allocation base in the denominator. This slide shows the manufacturing overhead budget. Again, we start out with the number of tablets to be produced that we calculated in the production budget. We multiply the number of tablets by, first, the variable overhead cost per tablet. So that would be given to us in the problem. After we multiply that $20 times the number of tablets to be produced, we get the budgeted variable overhead. And then we get that for each of the 4 quarters, and then we get a total. Next, we would list our budgeted fixed overhead. So first it shows the depreciation, which would be the same for each quarter, and then the total for all 4 quarters, and then we have various fixed overhead added together in the second line, and then a total for those items in the total column. Then we get a total budgeted fixed overhead for each quarter and a total budgeted fixed overhead for the year in the total column. Then we would go back and we would add our budgeted variable overhead costs to our budgeted fixed overhead cost and get a budgeted manufacturing overhead cost for each quarter and then a total for the year. So when we go to the total column, we can see that the budgeted manufacturing overhead cost for the year, both variable and fixed, is $154,560. That is going to be the numerator in the predetermined overhead allocation rate, because remember, the numerator is the total estimated manufacturing cost. For this problem, we are going to use direct labor hours for the denominator for the predetermined overhead allocation rate. So we calculated what the direct labor hours would be required in the direct labor budget that we just finished. We take each of those for each quarter, and then the total direct labor hours for the year, 6,720, is in the total column. We would get the predetermined overhead allocation rate by dividing the $154,560 by the 6,720 direct labor hours. And that would give us a predetermined overhead allocation rate of $23 per direct labor hour. So now that we have finished the direct materials, direct labor, and manufacturing overhead budgets, we can now complete the cost of goods sold budget. The first thing that we're going to need to do is to calculate what the total projected manufacturing cost per tablet will be for 2027. If you remember from the direct materials budget, it takes 3 pounds of direct materials for each tablet. The cost of each pound is $50. So the direct materials cost per tablet is going to be 3 times 50 or $150. The direct labor cost per tablet, if you remember, 3 direct labor hours are required for each tablet, and the direct labor hour cost was $25. So when we multiply 3 direct labor hours by $25, we get $75 of direct labor cost per tablet. The manufacturing overhead cost per tablet, remember it takes 3 direct labor hours per tablet, and the predetermined overhead allocation rate was $23 per direct labor hour. So we multiply 3 direct labor hours by $23 and we get $69 for manufacturing overhead. We add together the direct materials, direct labor, and manufacturing overhead costs per tablet to get the total projected manufacturing cost per tablet for 2027 of $294. This is the completed cost of goods sold budget. If you remember back when we first completed the production budget, we were told that there were 200 tablets in beginning inventory. If we went back and looked at the balance sheet at December 31st, 2026, we would have found that the cost of the 200 tablets in finished goods inventory was $55,000. If Smart Touch Learning uses FIFO, first in, first out, we would say that those 200 tablets would have been sold first. After those 200 tablets were sold, then we would begin to sell the tablets that we have produced this year. If you remember back to the sales budget, the marketing and selling departments estimated that there would be 500 tablets sold in the first quarter, 550 in the second quarter, 600 in the third, and 650 in the fourth. If we were going to sell 500 tablets in the first quarter and we sold those 200 in beginning inventory, then we would sell an additional 300 tablets out of the current year production. The current year production per tablet cost is $294. So we multiply 300 times $294 to get the $88,200 of additional cost of goods sold for the 500 tablets sold in the first quarter. So we add $55,000 and $88,200, and that is where we got cost of goods sold for the first quarter of $143,200. Then for the second, third, and fourth quarter, we multiplied the projected sales 550, 600, and 650 times the $294 per tablet, and that is where the cost of goods sold was derived for those 3 quarters. The total column would add the $55,000 and the total for the other production for this year of $617,400 to get total cost of goods sold for 2027 of $672,400, and that would be carried to the budgeted income statement. Last, we're going to see how we would prepare the selling and administrative expense budget. So the cost accountant would work with the office and sales managers to develop their budget, and the budget would estimate what it would cost in those expenses to meet the company's projected sales. There will be both fixed and variable cost included in the selling and administrative expense budget. This shows the estimated or projected selling and administrative costs for Smart Touch Learning for 2027, and they have fixed salaries expense, rent expense, insurance, and depreciation expense, and they show the amount per quarter. They also have variable supplies expense, and they state that their supplies expense will be equal to 1% of sales revenue. So we go back to our sales budget and we calculated sales revenue for the first, second, third, and fourth quarters. We take those amounts, multiply that by 1%, and that would give us the supplies expense for the 4 quarters. This is the completed selling and administrative expense budget, and it shows the fixed salaries, rent, insurance, and depreciation expense and the variable supplies expense for each of the quarters, totaled and in the total column. So the total budgeted selling and administrative expense would be $247,500, and again that amount would be used to complete the budgeted income statement. And that is the conclusion of the second part of Learning Objective 3.